These are the most common mistakes a lot of investors make, even intermediate investors, and I can guarantee that you have probably made one of these mistakes because I am guilty of almost all of these mistakes. And the crazy thing about these is that you don't even realize you're making a mistake until you know what it is. So be sure to watch this all the way until the end. And before we get into these, be sure to drop a like so I know to make more content just like this. Subscribe with the notification bell so you know when the next video comes out. And let's get right into it with the first most common mistake that many people make when they start off, and that is gambling without realizing it. I'm talking about penny stocks, short-term mentality. I need to double my money in the next week or two. Common mistakes we've all made, especially when starting out. Especially me, when I started out, all I did was penny stocks. All I thought about was, oh, Amazon is too expensive. I'm not going to pay hundreds of dollars for that one stock. I'm going to buy this stock that's 20 cents and it's going to turn into 30 cents. And I would look through all these forums and try to double my money. And sometimes I would, but most of the time I wouldn't, and I lost a lot of money. And let me save you the time and hassle if you haven't already gone through this. Basically, if any stock is under $5, it's usually a penny stock. And when you look at the long-term trend, you're going to see this all the way down. And to some people, they might be thinking, oh, is this a crazy deal? For example, Hertz right now is like all the way down. Some people think this is an amazing deal. I might double, triple my money. But why would you risk your hard-earned money into a stock like that, into a penny stock, when most of them are going down? And the issue here is that a lot of new beginner investors just get vultured on by these vultures. They send out all these crazy emails. They hype it up all over social media saying, this stock's going to triple, this stock's going to go to the moon. They pump it up, and then a retail investor like you finally gets the news when they release it. The stock price is pumped up, and guess what they do? They offload their shares, they sell it. If you've seen The Wolf of Wall Street, this is exactly how Jordan Belfort got rich. Pumping up cheap, dumb penny stocks that no one knew about and selling them. There's a scene in The Wolf of Wall Street where Jordan Belfort is saying, Aerodyne Technologies, one of the best companies starting out with missile technology, and it's a picture of some like ugly basements. All I'm going to say about the first one is that if you're going to just blindly invest in penny stocks, you might as well just go to the casino. If you want to day trade, at least day trade blue chip companies that are trending upwards. That way, if you make a mistake, you could potentially just hold dollar cost average down. But with a penny stock, you make one mistake and it goes down, it's going bankrupt, and you either sell or you just lose all your money. You sell at a huge loss or you lose everything. That is the most probable scenario with penny stocks, so avoid them at all costs. So the second most common mistake, which I am very guilty of, especially even recently I've had this, but I tend to look back and see, whoa, okay, I'm making this mistake, and that is your reticular activation system, where you put your focus. If you ever notice, whenever you invest a lot of money in any one company, you tend to focus on the positive news. For example, if you bought Tesla stock, what are you going to do? Watch a bunch of YouTube videos on Tesla stock talking about all these good things about it so you can feel good and go to sleep at night. But you won't pay attention to the bad news, looking at the bad articles, and that is a critical mistake. You always want to look at both sides of the equation. You want a holistic picture. Thinking you are 100% right is completely ignorant. Nobody can be 100% right. There is always a possibility of things going wrong, things not going your way. That's why I'm surprised when I make some of these stock market videos. I get comments of people saying the market's crashing for sure, it's going down next month, it's going to drop in half. How do you know that for sure? You don't. So always look at both sides of the argument. The third, and one of the most common mistakes a lot of people make, is copying what other investors are doing. There is a big problem with that. And look, in the beginning, when I just started investing, I didn't see the issue with this. I always thought, wait, okay, if Warren Buffett or someone very successful with investing buys stocks and makes money, why don't I just copy their exact trades and I'll make the exact amount of money? And yes, You technically could, right? If you do exactly what someone else does, you should make the same amount as them. But the issue here is you will have no true confidence in yourself when things go wrong, because even the greats like Warren Buffett make mistakes. Look at Kraft Heinz. Warren Buffett bought that company and it's been doing terribly ever since. But if you bought it blindly just because Warren Buffett bought it, then you would be doing terribly. And not only that, you don't know the deals that these big investors are getting. Warren Buffett gets higher dividend yields than what the stock market is showing. He gets preferred dividends. You don't know the exact deal, how much money he's making. He's guaranteeing himself a profit. He has an advantage that you don't, and that is billions of dollars and his reputation of investing, companies preferring Warren Buffett to help them out. You are not Warren Buffett. Sorry to say, maybe you'll be Warren Buffett one day, maybe, who knows, okay? Who knows where you'll go with your life? But as a regular retail investor, don't make the mistake of just buying something because someone else did. If someone else bought something, at least do your own research, understand the company, look at the financials, and when you are comfortable with it and you buy it, that is great, because when the market crashes, if things go the other way, but you did your research and you know it's going to be worth more in the future, you'll be calm, you won't sell at a loss, and you'll come out winning. The fourth most common mistake, and these are actually in no particular order because this is just as bad as almost all the other ones, and that is trying to time the market. Do you ever hear people say, I'm just gonna wait till the market crashes before I invest? People have been saying that since 2011, because back in 2008, after that horrible crash in 08, people were like, no, there's going to be another crash. In 2010, it's going to be a W-shaped crash. It's going to go back down again. You would have missed out on so many gains, on the longest bull run in history, over a decade of gains, by waiting on the sidelines trying to time the market. Don't make the mistake of trying to time it. It is extremely difficult. Rather, invest every single day, month, week, whatever frequency you want, dollar cost average in. That way you have the average price. It's not very volatile. It could be up one day, you buy less. It could be low one day, you buy more. Always investing the same exact amount. That is called dollar cost averaging. Another way is value investing, which is looking for the best deals at the time and just buying those companies, but always buying instead of waiting for a crash. And if a crash happens, you just buy more. And if a crash doesn't happen, you still buy, but you end up getting less. But overall, in the long run, you'll be okay, because here is the secret to investing. Here's the whole point to it. And that is acquiring resources, whether it's stocks, real estate, any type of asset, businesses, a farmland. You acquire more resources, you build more wealth, because guess what happens? When inflation comes up, so do the asset values. You want to be collecting resources. That is the main goal. Don't worry about the short-term noise. Worry about the long-term goal. And the last mistake, which is also very critical, is changing your mind all the time. Buying stocks, selling stocks, not sticking to your game plan. Maybe you did research for a week on a stock, you like a company, you buy it, next week you sell it because you saw a YouTube video about this other company that's merging with Nikola Motors and they're going to take out Tesla, so I'm going to sell all my shares, buy VTIQ, I think that's the ticker symbol. They're merging with Nikola, they're going to beat Tesla, and hey, maybe that's true. But you end up selling your old investment that you just did your research on to buy that, and maybe that old investment goes up more than VTIQ. Now you're stressed out. Maybe VTIQ drops. And this is just an example, and you stress out, and that happens all the time. And one of the greatest investors said an analogy. I don't remember exactly who it is, but he said, investing is like a bar of soap. The less you handle it, the more you end up having. So every time you sell a different stock and you change your allocations and you mess around with your portfolio, you have less and less soap because you're just using it more. The best strategy is to avoid doing that. So don't make any of these mistakes. Hopefully this video opens your eyes a little bit. You realize some mistakes you have made in the past. Take these 5 lessons and save yourself thousands, maybe millions of dollars down the line. Do not make these mistakes. Have a long-term mindset. Share this with a friend that you know has made these mistakes. Try to avoid them, and let's all save thousands, if not millions of dollars together and grow as a strong community. I'll see you in the next one. Peace.